I have three hats on here. One is a former leader and part of a group of 92 presidents and prime ministers around the world who are committed to working with players who are focused on the future. The Club of Madrid is a group of former leaders who bring our power to convene, our experience, our knowledge, and our desire to collaborate where change can be delivered to many settings. I'm part of our climate group, and more recently, for example, we've tried to reignite the P80 initiative in Little Rock late last year to get a fund moving in order to respond to some of these initiatives. And I won't elaborate further today, but if any of you would like to talk about that, I'd be pleased to do so. I also chair an energy company in New Zealand that happens to have the coal assets, the residual coal assets. We do have a carbon tax, and I have spent most of my political career in New Zealand focusing on creating markets. Just very briefly on that point, I can report that while I share Tim's caution on imposing new taxes, because electorally they're often fatal for political leaders, they do work insofar as they do in due course change behaviour. The company I chair shut down a 250 megawatt coal-fired unit late last year. The second of 4 is due to be closed in the middle of next year, and in part it is due to a tax that was imposed 3 or 4 years ago where we have to buy carbon credits to cover our emissions. And while Tim is right that it doesn't stop us emitting, because coal is a critical component in New Zealand if we are short of water or wind, but the geothermal assets in New Zealand that have been developed in the last 4 or 5 years have led our coal units to move from base load to peak. And as they've moved to peak, we've been able to make rational decisions in the market that have allowed us to see a repositioning. The third hat I have on is the China perspective, and it's a whole topic in itself. But I want to share with you 3 or 4 observations, partly in response to what we heard yesterday, and partly in what I think we should be discussing and debating as we go through today and we deliberate. The first issue that I want to simply put on the table is if we're serious and agree that there's a 5% degree increase in risk around climate, we should put that data aside and simply not allow people to debate the margin of error on the figures, but move it to centrally political initiatives and economic initiatives. In my view, the language of climate change is a trap. It has served us well in the last 20 years. It's my personal view that we need to shift now to enviroeconomics, or whatever we choose to call it, so that as we, as leaders in the finance sector and in the political sector, grapple with of the resources we've got and the priorities we wish to set, enviroeconomics sit alongside other activity as well. Because that, as we heard yesterday from our Indonesian and Vietnamese colleagues, is the reality of political leadership. And we need to quickly push the conversations of the actors who can work together into that zone. The second observation I would make, and again at the risk of offending you, who was not in the room, to me here, is what is interesting. I mean, if we're serious about delivering the change in targets, we have to keep thinking about who the actors are, and think about both in the developed economies what transformation is required and what policy and players can then deliver that change. And as Tim has elaborated, in the developing world, and China in particular, there are enormous numbers of initiatives. But yesterday I listened to some of you talk about whether or not, for example, you believed in reverse inquiry, whether you as investors feel that it's your job to go out hunting and matching where you've got public policy signals to see if you can get traction. I, with all my hats on, would say until we develop a resolve to start becoming serious actors, hunting down where the opportunities are that deliver these real change agents, then perhaps we are passive and part of the problem as opposed to activist and part of the solution. And I just give you an example. With my hat on as Director of China Construction Bank, you will appreciate that one of the big topics in China currently is wealth management products and shadow banking. It's a reality, and it's being brought under control, but it's code for there's a huge appetite of private investors in China who are trying to find products where they can invest in that will deliver a great return but are relevant to China's economic development today. The government is signalling very dramatically. CBRC recently issued a directive that basically says, and I quote, has issued a notice prohibiting channeling wealth management funds to restricted industries with high pollution, high energy consumption, and excess capacity. What I read that is there's a desperate need for you as investment operators, product designers, and people who are able to then operationalize them to be able to work and collaborate with players who have this challenge and create products and avenues to market where we can see win-win, and it will be transformational in the change. It's very ripe now, and I observe, I don't think China Development Bank is in the room. To my knowledge, none of the 4 major players of the retail banks are in the room. And I think we've got to, as a group, keep thinking about, if we're committed to the 5% reduction, think about who the actors are and what we can all bring to the table, not simply passively wait for product design which allows you to meet the rate of return that your trustees or your investors' appetite will bring. In my view, it requires us all to take our partisan positions off and think about how we can actively contribute. My third comment, Andrew, is around an observation that I've simply garnished over many years. What gets measured gets done. And while there are shifts worldwide on the types of ways in which we measure and report, I, for one, as a director of listed companies, would love to see a movement where investors, whether you are a polluter or indeed an investor, required to report to your exchange not only what your policy is in terms of investment and your appetite, your risk appetite, your policy directions and what progress you are making, but what measurements, particularly if you're in the polluting zone, you see as indicators and you're then reporting against. Now, I'm not suggesting we overregulate, because I think all we would do is paralyze the markets, but I do observe, for example, in the global diversity debate, we're trying to get a more diverse range of directors on board, requiring companies to report what their diversity policy was and what progress they've been made has been transformational in many markets. So I leave it with you as a suggestion that I do believe exchanges should seriously consider what type of operating environment they would require listed entities, both in the investment and in the manufacturing and polluting sector, or in the water use sector, how to describe what they are using, how they are measuring their impact on that use, and how they are holding themselves to account on the commitment of trying to bring constant improvement. My last one I wish to return to is returns. I listen often to people talking about effective rates of assistance that governments can bring, the argument of subsidies, the argument of how you intervene effectively. At the risk of offending you all, when I hear people saying they would invest if they had products, and the product designers saying we've got the products but you're not investing, I bluntly want to ask whether the stranded asset or stranded proposition is not the design but your expectation on returns. Bluntly, I believe there may be higher unrealistic expectations from the investment community in this area. Now, I know that's heresy. But how can we ask, if we're committed to equity and participation and access to energy and all of those important things where over 1 billion people don't even have a light switch to turn on, how can we argue that we're going to ask governments to intervene and pay us to design products or strategies that we will then invest in only if we can get the sorts of return? I do not believe in transfer of wealth to the extent that I sense there is an expectation. And dare I predict, if we are going to solve this problem, there is going to have to be an alteration in expectation on returns in some of these investment categories. And that is a debate that needs to be ignited amongst trustees, amongst those of you who have to design products and report it into the market. And any of you who think this is too hard, I want to really put this on you. You cannot claim to be green or offering products in the market if you're speaking out of both sides of your mouth. I reserve the right as a political leader to say that we are all beholden to think about unintended consequences as well as intent.